We have to talk about something that Mohammed El-Alarian correctly called erosion of trust. I love it when the talking heads on the various news channels start talking about things you and I have been talking about for weeks. One of the things that Mohammed El-Alarian is talking about today is the consumer has had an erosion in trust with the banking system. Again, you and I have talked about over the last couple of weeks, and many of you have left comments below what you did. When you look at the average consumer in America, I think it is no secret that they don't have a lot of cash at the bank. Most Americans would be well under the FDIC limit and thus should not be concerned. But as we talked about 2 Saturdays ago, they are concerned. They are scared. They don't understand. They are nervous for they don't want to lose their money. It makes perfect sense. They don't understand the bigger picture. But what is happening is they've had erosion of trust. They are moving from little banks to big banks. Many people are even taking their cash out and leaving it at home where they perceive it to be more safe. Folks, what does this really mean? Well, it means our call of the consumer being broken on that Saturday post Silicon Valley Bank is coming true. Not only are they scared and moving money, but remember, they're not spending. They're significantly down, and we will talk about that a lot later when we talk about some new data I got this morning on credit cards. Folks, if you're not following me on Twitter, you are missing out. I continually forward relevant information to my Twitter handle, one rental at a time. Please go there, follow it. Also, you'll get some joy. We are doing random acts of kindness. We are spontaneously buying gift cards and dinners and things like that. Follow me on Twitter, one rental at a time, and see the random act of kindness. But again, erosion of trust. And we are just starting to see the data ripple through. It is going to be very, very clear that many of Americans have closed their wallet because they are scared. Next, let's talk about something you and I have talked about for 9 to 12 months. One of the things I try to do on this channel is educate. And then I try to weave together what is actually happening so you too can see the dominoes falling. Remember, we have talked a lot about real versus nominal prices. A lot of economic charts come out and they are nominal. What is nominal again? Means not inflation adjusted. What is a real number? It means it is adjusted for inflation. So I ask you, let's talk about retail sales. There are a lot of people, a lot of talking heads on TV saying, look at that. Retail sales are strong. They are at 5%. Point number one, if you don't know, you probably don't need to know this. I mean, this is some geeky stuff. But retail sales are reported in nominal terms. They are just accumulation of current dollar spending. So that should be your first sign that maybe what you are hearing, or maybe what frankly they don't understand, or maybe they are just simply talking their book. They're long retailers or long something. So if retail sales are not adjusted for inflation, they are nothing more than a nominal metric, what can you and I do? Well, you can adjust them for inflation. Now, the easiest way to do that is to go to a consumer inflation metric. It is not PCE, personal consumption expenditure. It is not PPI, producer price index. It is CPI, consumer price index. So what was the last reading for CPI? Do you remember? It's okay if you don't. I'll tell you in a minute. The last CPI reading for February was 6%. So again, I ask you, is retail sales at 5% a nominal number, good or bad? Well, if you take 5% and you subtract 6%, you actually get a negative number. Retail sales aren't strong. People are spending more. Yes, retail sales are up numerically, but it's because inflation is so high. So again, when somebody tells you retail sales are strong and the number is not inflation adjusted, you can give it a little side eye. You can also understand that you and I have been talking about this for a while. We expect this to come down and come down pretty hard. So again, remember, retail sales are not what people are saying. So is it good or bad? 5%, not particularly good in a 6% inflation world. Excuse me. Pending home sales. We got pending home sales data for yesterday. Pending home sales, once again, shocked. Remember, pending home sales are not closed transactions. They are signed contracts. Pending home sales were up 0.8% month on month. They are down 21% year on year. Anybody shocked by that? Again, we've been calling on this channel transaction crash. We're seeing in the numbers. You and I know that 6% brings demand, not supply. There is no supply. You and I know there are bidding wars. Many of you have sent me pictures and short videos of lines out the door for affordable homes. But again, you can't have a transaction, you can't have a pending home without a listing. And it brings me no joy to say this. The sellers are MIA. They are missing in action. And frankly, they're likely not coming back to 2026 at the earliest. Sellers with low rate mortgages need multiple life events to even consider moving, and I suspect many of them will just keep the mortgage and rent the property out. Yes, folks, the housing market is broken. It is interesting to look at pending home sales. It is up in every single region except the West. The West is actually down 2.4%. West being California, Arizona, Washington, Oregon, things of that nature. So again, I actually believe that home sales, existing home sales for the month of March will disappoint. Remember, February was 4.58. I see no chance getting back to that number. There is no listings, and we have a disproportionate stacking of luxury and a very few below the median. It's rough out there. So I want to tackle something. There's a lot of talk about job losses. A lot of talk about the Fed causing millions and millions of job losses. I want to be clear. I do not believe the Federal Reserve wants job losses. That's not their goal. It may be a derivative of what they want, but it is not their goal. Let me explain. What the Fed wants is obviously to bring inflation down. They are doing that by raising the cost of capital. They are doing that by talking about saying higher for longer. All of this is intended to slow down consumption. It is to slow down the money supply. It is to slow down lending. Now, this may lead to job losses as companies don't expand. They don't borrow for capital improvements. They don't do any of that. That may be an output. But remember, the environment we are in today also has a banking crisis. The banking crisis will undoubtedly raise or will lower lending. I want to give you some feedback. Again, Danielle DiMartino Booth is an excellent economist and a rock star and former contributor to the Dallas Fed, I believe. She and I don't always agree, but I think she puts out thought-provoking information. Just today on Twitter, Danielle DiMartino Booth, again, quoted something from Apollo Global. Again, if you follow me on Twitter, you will see that I shared Apollo Global's chart. What Danielle is talking about, credit spreads are up 1.5%. What does that mean? That means if you are a business going to borrow money, your costs are up 1.5%. Why is that important? Well, the expected return of that investment or borrowed capital has to go up. What does that mean? It means less people borrow. Point number one. Two, this tighter contraction and essentially regional banks being out of the market, Danielle believes that this could be as much as 1.5 or 150 basis points. To put that in context, That means the Fed funds rate today could be acting like 7.25% or 7.5%, where it is actually sitting at 4.75 to 5%. This is a meaningful change, a meaningful change. Hey, Maddie, thank you very much. I appreciate you. Thank you for the super chat. Maddie, right? Yep, Maddie. Thank you guys for the super chat. I appreciate it. So again, as you and I have talked about, other talking heads are now pointing this out. This is good news. This helps Powell. This means he could be almost at the terminal rate. This is good news. It is good news in my opinion. And then finally, where Danielle went with her analysis, which I thought was great, again, in reference to Apollo Global, let's give them credit for the chart. Negative GDP could be as much as 1.25%. Again, the slowing of all of this consumption and lending will hit GDP. You and I talked about that. And again, lastly, something I put out or I theorized, and Danielle and she actually agreed with me. I didn't know, but I told you several days ago that I believe the maximum impact of said environment is Q4 or Q1. Everyone wants an instant reaction. It's not coming. It's not coming tomorrow, next week, next month, or next quarter. This is think it's a slow burn. I can see the dominoes falling, but they're not falling nearly as fast as everybody wants or expects. This is going to hurt. It is going to cause pain. It is going to be a 3 or 4 quarter, hopefully shallow recession that I do think starts in Q2. But the maximum impact of all of this isn't felt till Q4 or Q1, and it is felt all next year. Just the maximum, as you and I discussed probably a week ago, is Q4 or Q1. Q4 this year, Q1 next year. So let's talk about a lot of stuff. We got PCE tomorrow. PCE, personal consumption expenditures. Let's lay out the expectations and let's talk about it. Let's talk about core, because that is what the Fed looks like. If the Fed says that it's their favorite metric, why should we argue? Let's talk about it. So PCE core month on month is expected to be up 0.4. Last month, 0.6. For the year is expected to be up 4.7. It was 4.7 last month. So a couple of things we must understand. We must understand. This PCE metric that we are about to get is I'll say that again, pre-banking crisis. Silicon Valley Bank was a still living and breathing bank, Signature Bank, Credit Suisse, all of these institutions were still functioning without a care in the world. So this PCE number is pre-banking crisis. No impact, okay? So it is just where we were. What I believe is going to come out is oh man. I'm gonna come out and I'm gonna go on a limb. Ooh, do I want to do this? Yeah, why not? I'm going to say PCE is 4.6, so under expectations. And yeah, I'm going to say the core, I'm going to say it goes up 0.4%. So I'll be in line with month on month, one tick below PCE year-on-year number. Let's be very clear. If PCE comes in hot, meaning 4.8 or above, market's not going to like that. If PCE comes at 4.5 or below, the market's going to love that. It's kind of where we are today. We're back to good news is good news and bad news is good news. We've kind of flipped the script. Let's talk about unemployment. Again, folks, every week, every Thursday, you and I get a little drumbeat of what is going on in the economy, and it's called weekly jobless claims. Weekly jobless claims have been down 3 or 4 weeks in a row, all sub 200,000. We are still below 200,000, but we are up week on week. We were 191,000 last week. We are 198,000 this week. It is my belief that this number has to go over 300,000 before Powell kind of feels like he is winning and inflation is behind us. Credit cards. Again, follow me on Twitter. I put this out this morning. It is the first economic report that I think captures the banking crisis. A lot of the economic metrics, the flash metrics, still precede the banking crisis. It's recent. This is a report that came out. I wish I cited the source, but if you follow me on Twitter, it is there. Credit card spending for the month of March has taken a precipitous drop for retail and food services. What is something you and I have seen with CPI and PCE and retail sales? We have seen a booming of eating out. Credit card spending, right around the banking crisis, fell off a cliff. This is exactly what I thought would happen after that Saturday. When you and I talked on Saturday after Silicon Valley Bank, and I made the bold call that the consumer just broke, that is the first metric that says I'm right. Again, what happens, or what did I theorize would happen? You can go back and look at it. People are going to pull money from the bank. They're going to put it in the big bank. They're going to bring it home and sleep on it. And they're going to stop spending. Honey, do we have to go out to the family dinner? Let's have food at home. Honey, do we need to? Let's have food at home. This is consumer behavior changing. The consumer is such an important part of our economy. They can flip on a dime and bring on a recession. I think it is coming. More of that. Again, down 50%. Think about that. That is a lot of Americans not eating out. So, lastly, 3 important announcements. 1, if you were a part of our first ever Buy Box Deep Dive, and thank you for the 100 folks that were there, I spent 2 hours adding all of you to the course on Teachable. I used your name and your email address that you registered on Eventbrite. You should have an email from Teachable with a link to that course. So not only did you get access to the live session and ask questions, but I'm giving you the replay. It is there for you. If you wanted to buy it and it was sold out, you can buy it today. I will put a link below in this video, or you can find it on my courses on Teachable. I will probably do a video later about the outline. But again, the 2-hour deep dive on Buy Box is how you start. It is how you build confidence. It is how you find great deals. It is how you avoid bad deals. It is there for your taking. I highly recommend it. Second, we talked about earlier in the week, should we do a ladies only Legends of Real Estate? Should we talk about how agents and investors work together? Good news. My millionaire friends have said, I want to be a part of this, Michael. I want to help you. I want to talk to your audience. So on April 16th, Sunday, April 16th, we are doing the Ladies of Real Estate. We will start at 7 a.m. Pacific. We will go to 11 o'clock. You are going to have the opportunity to interact, ask questions, pick the brain of 4 rock stars. Anna Kelly. Anna R.E.I. Kelly is going to lead us off at 7 a.m., followed by April Crosley, who is a part of my 15 Conversations with Millionaire book, which you got to read. That book was written for you. Then we have Alicia Merriman out of Huntsville, Alabama, and Casey from Brick by Brick, her Instagram channel. These 4 ladies have all been on my channel, several of them multiple times, so you will enjoy that. Again, I will put a link below. You can go to Eventbrite and find that. This will sell out. Only 100 seats. And then finally, 423, we're going to have Beth Traverso, a top 1% agent, talk about how you as an investor could get her attention, how you should work with agents. We're going to bring Jason Pritchard, the best real estate investor in Fresno, also an agent, to talk about how investors and agents can work together. And finally, number 3, we are going to have Ty, or TYLG as he goes by, talk about this as well. Folks, we are bringing you more and more value on this channel. You get to interact with these folks. I hate PowerPoint. These are no PowerPoint. These sessions will be driven by you, the audience. These are meetings, not webinars. I can only do 100. If I wanted to do 250, it would have to be a webinar, and I'm not doing that. I don't want us preaching. I want us interacting. I have no idea where these meetings will go because it is your questions that will drive us there. So again, April 16th, you get the 4 ladies or legends of real estate. Then the 23rd, you get 3 rock star investors, how we can all work together on that. So you wanted them. We're doing them. $47, limited to 100 seats. They will sell out. Our buy box session sold out in 5 days. These might sell out faster. You can find it right now on Eventbrite, or I will put the links here shortly. All right, folks. And then lastly, let's congratulate a bunch of people before I forget. Let's congratulate Anna and Rick for getting your next deal. Congratulations. Let's congratulate Sam for getting his next deal. Congratulations. Let's congratulate Casey. Casey for getting her first deal. Let's congratulate Blair and Amelia for getting their first deal. Sam, you actually get 2. You've got 2 deals. Here's the card for your first deal, and you already saw your second deal. And then finally, Damien, congratulations for getting your first deal. Folks, 1 rental at a time works. How to get started 1 rental at a time works. Buy box, focus, daily discipline works. Build confidence, do the work. Stop whining, stop being scared. Just get out, do the work, get confidence. Have fun, folks. Bye.